everybody. Welcome to our Thursday call with myself, Vaughan, and Shaun. Vaughan's going to take us through Impala, but before we do that, I just wanted to touch base with you quickly and tell you that I've uploaded the recording that Vaughan did with the CEO of Renogen, Stefano Marani. I've sent out the links to you guys via email, so check it out. Very nice chat between Vaughan and Stefano, and giving you some insights into what Renogen's busy with. Vaughan, over to you. Let's talk Impala.
Great. Thanks, Sarel. So I'm just sending apologies on behalf of Matt. Unfortunately, he couldn't make it. So I'm basically pretending to be a platinum analyst for a while. Essentially, what you would have seen is that Impala reported today. A couple of days ago, we had Sibanye. The platinum counters have had a very tough time of late, and primarily that's because of the rhodium prices. And then we'll get into a little bit of that later. But what I'm going to do is essentially update you on the results that they came out this morning. We've got a little bit of work that also relates to the platinum sector report that we did, and how Sibanye and Impala are in our horizon. Sibanye is a buy and Impala is a hold as far as we're concerned. So literally they released the results this morning. If you have a look at it, revenue was down 10%. Essentially lower PGM prices, which is really lower rhodium prices, which is the main indicator, and a slightly weaker rand. The gross profit margin came out, quite a bit weaker, and that's essentially because their costs grew by about 10%. So that was a pretty tough one. And then headline earnings down 42.5% and EPS down 85%. The only reason why the EPS is down 85% is that they had to do some write-down of some assets, which is what we sort of look through. If you look at the next slide, essentially what was interesting is that the production in 6E ounces was up about 2%, but the refined platinum was down 4%. And that's where, unfortunately, we have the joy of South Africa, because partially it was due to load curtailment, which they have to cut 10% off their loads, which definitely impacts the refining. And then the second thing is a bit of cable theft and one or two other issues. So it's a little bit unpleasant when you have a look at that. Marula was a little bit down, and some stoppages. Before I go into a little bit on rhodium, we'll have a look at the guidance. The guidance is a little bit better for 24. If you look to the far right, call it up 10% in terms of refined production. So clearly we are starting to see a slightly better improvement in the load curtailment issue. Half two of this financial year was significantly worse than half one, but obviously half one of 24 and going forward, we're expecting a little bit better as these companies put mitigation processes into place. The costs up, as we can see, roughly about 10%. Again, that's the problem with these kind of mining counters, is that over the long term, typically you look at sort of 10 to 14% growth in costs, which is quite tough when you consider that they don't really have control over the revenue. Rand dollar a bit weaker, so that'll help them, and the capex a little bit more. So I'm going to jump over. I think Matt has spoken about this before, and it is in the platinum piece, which he spoke about. Rhodium came off quite a bit, and essentially it was less about the automotive and more about tools which use rhodium, and they essentially exchanged rhodium for platinum to make those tools. So that's where we had a bit of a reduction in demand. If you look at going forward, certainly what Impala is saying is that there's going to be a supply deficit in platinum, palladium and rhodium, which should support the prices going forward. If we digress for a second, you can essentially see that there's a lot of news on China that impacts, your iron ore, your copper, all the sort of non-platinums. Platinums have already been impacted by the view that EV will be very much quicker growing than internal combustion engines, but I think over time that might ameliorate a little bit, because you can't really use EVs for trucks, which is a very big chunk of your demand because they don't have the torque. So it's a case of we've got to sit tight. It's been a bit unpleasant to be exposed to platinum counters, but we still like them. In order, I'm going to jump over this in order of Sibanye and then Implats, and lastly, we don't like Implats. So you can have a look across this chart since the beginning of the year. Sort of the platinum, which hasn't really come off, is flat-ish. If you come down, the 6E basket is down here. It's come down sort of, call it 30%, driven mainly by rhodium, which you can see right down here. Rhodium is down about 65%. And as we got the education from our platinum miners, even though rhodium's a small part of their basket, it was significantly highly priced. So it grew to quite a big chunk of their revenues and now has reversed. There's Impala, there's Sibanye, which is the best of them. So if you look in the context of having a platinum stock, we like Sibanye. It's got a little bit of gold too. Then we like Implats, and then we don't like Anglo-American Platinum. So I'll just throw up our recommendations. Impala, we've got a hold, but remember, we've got a buy on Sibanye, and we've got a hold on Anglo Plat, but it's the least favored of our stocks. So again, as we've said before, and we said a couple of times, we like Sibanye. Impala is still a good company, and we're going to be picking up a little bit of RB Plat, which essentially gives you a hedge against the reduction in platinum, because RB Plat is contiguous with Impala area. So it's a good long-term buy. Then I'm going to hand over to Shaun to talk about the technicals.
Okay. Yeah, good morning, everybody. As you can see, the chart there of Implats, I must say it's not an exciting chart. You can see the trend there, the share price. Obviously, the long-term trend is bearish. I say this nearly every week. It's trading below its 200-day moving average, as well as that long-term resistance trend line. In the short term, you can see that little rally we recently had. The share price rallied up to retest that 21-day moving average. That's that red line. But it's still trading below its 40-day moving average, which is a green one. So also in the medium term, you can call the trend bearish. You can see in the bottom graph there, bottom part of the workspace is what we call the MACD indicator. It's an oscillator. It's trading below its zero line there, so that's what we call oversold territory. And although it's trading up, it looks bullish, but other technical indicators like a RSI and the stochastic already trading in overbought territory, suggesting that this little rally that we've recently seen now is losing momentum. So, as you can see with all those different red lines here, those horizontal red lines, the share price has fallen below numerous support levels, and obviously also recently established a new support at that 93 Rand 70 level. So if it breaks through that, if it pulls back through that, the next support will be at 76, 74, and then way down at 52 Rand. So yeah, we give a intrinsic value of 114, which is that you can see that previous support resistance level. That's where our intrinsic value is, and we're trading way below that. And yeah, as Vaughan just said, now we've got a hold recommendation on the stock. Yeah, as I said, from my side, it's not a very exciting stock, exciting chart rather. Okay, thank you.
Thanks very much, Shaun. Shaun, I want you to just hover your mouse there over the second support level. You'll see that pivot at the top there. I wanted to point out something to the guys who don't typically do technical analysis and those guys that don't trust technical analysis. What we say in technical analysis is that if a support level is broken, it becomes the next resistance, right? So if you look at the drop in those long list of red bars just to the left of where your mouse pointer is now, no, not that far, there. No, to the right, those long list of red bars before it went through the second. Yeah, go down. Now it goes down all the way, goes to the next support, builds a support, goes up and kisses that previous break point where it broke the support, and that now becomes resistance. Down again, went through the other one and gave it a little kiss goodnight and down again. So there's definitely merit in doing these technical analysis charts and having a good look at them, because it does give you insight into price levels and where the market finds footing, especially when a stock's falling like this. And then, of course, if you are taking short-term punts to pick levels to get out of again, you would typically set your profit-taking area around the spot where it broke the previous resistance, because that will now become previous support, where that'll now become resistance. I just wanted to highlight that. And then, as usual, switch on your camera and your mic if you want to ask questions. I'm going to go check the chat. I see Ray's asked me a question to say he hasn't seen the Renogen email yet. Ray, it's in the pipe, but it's sent to thousands of people, so it'll get to you sometime this afternoon, mate. It's definitely out there. So you'll get it sometime today, and then you're welcome to go watch the video of Stefano Morani and Vaughan having a chat about Renogen. Let's see if there are any questions about Impala. I think Vaughan was clear in that we like Sibanye, Impala, and don't like Amplats. And there's not much to say. I mean, these guys are under pressure. There's Vessel. Vessel says platinum mining industry in South Africa has quite a poor safety record and, of course, history of union-related violence at these mines. What are the impact of these on share prices the past couple of years? I'm sure it took a proper beating after the Marikana thing, but yeah, I think Vessel, I think the unions definitely have an influence here, especially when the times come when there's wage negotiations and that. Safety records and that, I haven't heard much about safety at mines or people dying at mines lately in the news. So from my point of view, that doesn't have a major influence, but definitely the unions do play a part in the costs of these poor companies, because they try and get more pay out of them at every opportunity they have to renegotiate the contracts. But I think, Vaughan, we discussed it earlier in the year. I think these guys are pegged now for 2 years or before they renegotiate or something like that. Most of these miners.
Yeah, but you know, the point is a valid one. All that happens with the miners is that you typically, as we're seeing, the expectation of their costs is sort of 6 to 10%. That's for Impala for the next year. Over time, your problem is that your costs are always growing simplistically at 10% a year, and your revenues are a little bit out of your control. So the level of risk that you take with a miner increases over time, because you're essentially the amount that you put in your pocket past all the costs becomes more and more volatile over time. So these are volatile companies. They're always volatile. They're going to be volatile. But the counterpoint is that if you get them at the right time, they obviously can give you great performance, as we saw a couple of years ago. And now it's the other side of the coin. We happen to think we're in the right place for this, but we would be very concerned about your iron ore miners, your coal miners. As we can see, they're on the wrong side of that trade now.
Right, thanks, Vaughan. And then Dino says, is the gross dividend declared today not significantly lower than expected, 165 versus 10.50 Rand the previous year? The earnings were not down by 80 to 90% as the dividend is.
So the short answer is, yeah, the divvy was down 63%. The earnings were down 42%. But remember, what they've done as well is that they've also given you guidance. As we saw in the guidance, your capex is up about 10% as well. So you need the cash flow for the guidance. And in some ways, you actually want them to retain the money at the moment, because they want to actually feed that into RB Plat and the opportunities. That's where you're going to get the refined production up about 10%. So factually, you're correct. It's not quite as bad as down the EPS, which is a write down of asset values, which changes with the wind as far as we're concerned. But you've got a higher capex, and they want to retain their free cash flow. And they're clearly telling you that they want to be somewhat careful about retaining cash in the kind of environment that they're going into.
Thanks, Vaughan. Dino, I hope that answers. I don't see any other questions. Are there any last questions for Vaughan? Doesn't look like it, Vaughan. Great job. Thanks, mate. Thanks for your insight. Always lovely to have you on the call. Shaun, thanks for your technical bit. Guys, thanks very much. If you have a last question, this is your last chance. I'm going to close the meeting. Sound like an auctioneer. But have a great Thursday. And yeah. Oh, hang on. Here's Ray. Ray says, has PDG done any PSG probably is a typo. He says, has PSG done any research on the impact of the hydrogen economy?
Short answer is hydrogen we have, because obviously hydrogen is going to be what is going to replace. So your hydrogen vehicles are going to be the ones that replace your diesel over time. So we've done some high level research, but it's still quite a long way away. And obviously that is very positive for, let's call it, the PGM metals. So this is part of why we believe the supply and demand is in favor. And as tough and unpleasant as it's been to watch these things go down, we believe that there is a decent enough outlook that we want to hold on.
Thanks, Vaughan. Ray, I hope that answers. Any last questions? Ray says thanks. Clive says thanks for the presentation, Vaughan. Yeah, I've already thanked you, and thank you, everybody. Have a fantastic Thursday. Cheers, man. Bye-bye.
Right. Cheers, everyone. Bye-bye.